Broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, welcome from around the globe. We're very honored, truly appreciate you giving us the opportunity and to present today and to be with us today. Chris is going to present on the metals, which has been our most popular research with blog viewers and members. I don't know what just happened here. I'm going to switch. There we go. So anyway, the metals has been the most popular research with our blog viewers and our subscribers over the years. So we're excited to be presenting this to you today. And we have not in some time presented on the metals specifically. It's been a long time, in fact. So a couple of housekeeping items for you. The webinar is being recorded. We'll email that out within about 24 hours. And the slides of the PowerPoint that we're going over are free to you. We will include them in a follow-up email so you can use them as you wish. Share them with others as well. Make sure you pay close attention throughout this webinar, folks. If you've been on to other webinars with us, we're going to have a giveaway. And first to answer gets the prize. Though we didn't make any offers on Black Friday or Cyber Monday, so I guess we'll do our own giveaway Tuesday and have some fun today with a few giveaways. And then following Chris's presentation, we're going to have an exclusive offer that we'll make to everyone on the webinar. So as a recap, the last webinar that we did, we had 2,700 hours worth of giveaways. They were just people who answered the quiz questions that Chris posed throughout the webinar, and 2,700 hours for just those giveaways, but $49,000 of research we gave away to the first 61 people who subscribed to our research, and that was the weekly combo. And so we're going to do something similar today, folks, so everyone can win. Here's how you participate. At the time of the question, expand your webinar panel. And then you're going to click the red arrow on the top right-hand corner of your screen here, and that will open up the panel. And it'll look like this. And then you want to open up the questions box by clicking the wedge to the left of the questions, which, of course, throughout the webinar, if you have questions that I can answer, happy to do so. But when it comes to participating in the quiz and in the giveaways, make sure you have this open. And you'll actually put your answer right here in that box, unless it's expanded, but this is where you'll place that answer. So that's how you participate in the quiz. Today we're going to again talk about the metals, for looking at some potential big moves in the metals, and Chris is going to be presenting that today. I'm going to talk a little bit about Chris for those of you who might be new and don't know a lot about Chris. He has over 38 years of experience in the financial industry, with 25 of them as a financial planner before turning chart technician and starting Kimble Charting Solutions back in 2010. Chris approaches problem solving through very effective questioning without assuming or projecting or guessing, but he allows the answer to kind of surface on its own, and he applies the same approach to charting by allowing chart patterns to provide the answer as well as the action to take. Every day, Chris produces one-of-a-kind big picture chart patterns that highlight extremes in price and identifies reversal and breakout opportunities. His goal at the end of the day, folks, is to empower each one of us to make better entry and exit decisions with greater confidence and clarity. There's a guy by the name of Howard Lindzen. He's a seed investor, hedge fund manager, StockTwits founder, and he calls Chris a chart artist, and has shared Chris's work with many times, in fact, with his 1.5 million subscribers I think he now has on StockTwits. So we're very appreciative of that and our friendship and association with Howard. And chart artist kind of seems more accurate as a title than chart technician. Chris's work has been featured on CBS, MarketWatch, CNBC, Bloomberg, Yahoo Finance, Seeking Alpha, See It Markets, Zero Hedge, Doug Short, and others. And he considers himself very fortunate to have met and been mentored by Sir John Templeton back in the 1990s. And this experience and 38 years in the industry has guided him to be among America's premier chart technicians. So with that, I am going to bring Chris on and switch over to him right now. And Chris, you should have it now.
Thank you, Rick. Can you hear me?
Yes, sir.
Welcome, everyone. I know you have a lot of choices of things to do with your time these days, and so welcome to our metals webinar. As Rick said, it's been a year since we've done this. I hope that says a little bit about how important we think of a time frame that metals are presenting from a charting and sentiment perspective. So again, thanks to everyone from around the world for joining. And I'm going to go ahead and try to get into this right away and have a little bit of fun and get my slides going here. Thank you. As Rick said, I just real quickly want to say a thanks to everyone. You can see my daily post on Stock Twits in the upper right, at Kimble Charting, at the same with Twitter. So we really appreciate your following, everyone. It's a lot of fun to try to help and share ideas. And thank you, Stock Twits, for voting us last year for Stock Chart Artist of the Year. Also, our work can be found regularly at seeitmarkets.com, another great site. Thanks to Andy, the owner of the site. He's been a good friend, and there's a lot of great research, many very, very quality ideas and contributors there. So if you don't have See It Market be one of your regular places to visit, I would suggest to. Before we get started, I always want to just remind people that I think it's a really good idea to not be bullish or bearish on certain investments. I do believe that it's good to be bullish one thing, and that's opportunities. This is, as Rick says, this is my 38th year in the financial services business, and I've never been more excited, and I believe the opportunities have never been bigger than what they're presenting all of us today. So again, over almost 4 decades, I think the biggest blowups that I've seen in people, regardless of the asset class that they like or don't like, is to become a perma something, a perma bull or a perma bear. I've watched people be perma bullish when assets just keep going down, and they just keep riding it down and losing and losing and losing, and they're missing out on opportunities. And I've seen the flip side where people have been bearish on assets, and they've went up and they've just fought, and they've lost out, again. So one of the things is I don't have any kind of a crystal ball, everyone. We try our best. We make mistakes. We try to know where the line in the sand is when we're wrong, that if we're wrong, we're not going to be wrong for long. And I think that's just a great strategy to adopt, regardless of the type of assets, that you trade. So one of the things I wanted to just pass along, as Rick said, there's each of the webinars, I promised my mentor, Sir John Templeton, that I would always bring this up as long as I was alive, doing meetings of some type, regardless of the assets that you like, everyone. Sir John shared with me, he said, Chris, outside of the Bible, there's one book that has helped me the most in my business decisions. And even though many of you may know Sir John is a great fundamentalist, which he was one of the greatest of all time, I find it really interesting that he didn't bring up a fundamental book. He brought up a sentiment book. He brought up a book about emotions, a book about how to understand human behavior. So I promise you that if you can go get this on Amazon.com these days, the book's The Extraordinary Popular Delusions and the Madness of Crowds. I encourage you to read it. You'll look at the news headlines and market activity in a lot more beneficial way. So today, real quickly, is I want to help show how to build short and long-term channels, and how to use those channels, and how to spot entry and exit points with sentiment extremes in play. These are the best ingredients that I think that we can offer. So again, these inflection points when sentiment's at extremes. Today, one of the main themes is going to be about loading up the truck, or knowing when to take the money and run. And so just to get into this right away, I want to just do a giveaway to you people that have joined us right at the very beginning of the webinar. And so As Rick said, you're going to want to take the box in the upper right and expand the orange arrow to the left. And I'm going to ask a question, and the first one to answer it correctly is going to win a 90-day subscription to our weekly metals report. And again, it's the first one answering it correctly. And if Rick has time, he's not going to do it during the webinar, but if he has time, he'll get with the winners later on. So I hope you have fun participating, with this, and we're just happy to give away some research and respect for you being here today. So the question I have for you is, what currency has been highly correlated with metals, and particularly gold, going back to 1979, and suggested that gold could be topping in 2011? So again, what currency have we found extremely valuable and highly correlated with metals going back multiple decades, and this currency suggested that gold could be topping back in 2011? And as y'all know, if I was a little bit more prepared, we'd have the Jeopardy theme song going on as you're thinking hard and responding to those questions. So we'll just give it a little bit longer. So imagine that you've had enough time. I appreciate your sending some stuff to Rick. And so this slide's going to move on you. It's going to move from your left to right. And there's going to be a question that's going to come up, and we're going to answer this currency question here within a couple of slides. But I just want to ask you, if you saw this chart pattern unfolding, that whatever this asset is, that you can see it start bumping up against a resistance line, higher lows, higher highs, bumps up against it, what action would you take at the top of this resistance line in 2011? Would you be a buyer? Would you be a renter? Each time it's hit this, in these red shaded boxes, and I didn't even put the one on the biggest one on the left, this asset's fallen 20 to 45%. So here's how it unfolded after hitting that 7 years ago. And this is going to be the answer to the quiz coming up in a next slide. But you can see after it hit this resistance line, it backed off and has been fading, creating a series of higher lows and lower to flat bottoms over the last 7 years. And at the same time this asset was hitting this 30-year resistance line, this is the sentiment on that asset. And you can see in 2011 that almost 90% of the investors were bullish this asset. What would you do at that time? So the answer to the quiz, everyone, is the Swiss franc. We're all aware of, if you answered that the Aussie dollar is oftentimes correlated with metals. That's true. And what other currency? Maybe the Canadian dollar. It's also fairly commodities correlated. But the answer that we were looking for is the Swiss franc. This is a copy of the blog post that we put out on September the 1st of 2011. And this is that chart that we looked at earlier when I said, what would you do when this particular asset was hitting this 30-year resistance line? And so at the time that this was taking place, I had noticed this trend that every time this resistance line had been hit by the franc, that the franc and metals, you can see this is gold on the bottom section of the chart, had been flat to lost a large percentage for years and years to come. And so now the Swiss franc was hitting a 30-year resistance line, and gold was hitting a 10-year resistance line after having a positive return for 10 calendar years in a row, which was a first in history. So, at the time that I wrote this post, I took a good deal of ribbing from some pretty established people in the metals community. Chris doesn't know what he's talking about, and I can understand where that was coming from. But folks, when you add the sentiment, you add chart patterns, put a little bit of that extra popular delusions book in your system, and you'll have a much greater chance of finding these key inflection points. And at that time, essentially what this was saying, you want to be a buyer or a renter? No, it's time to be a renter of the franc and metals. And we all know what's happened since. So again, today we're going to talk a lot about renting versus owning the metals. Is it time to back up the truck? And I'm going to continue to encourage you to don't be some monster perma bull or bear with these assets. Yes, metals have been down 7 years in a row. Don't give up on them, folks. But after they've gone up 10 years in a row, also don't own them just so blindly that you can't understand that chart pattern can be saying it's a time to rent. So here's the chart that was shared in September 2011, just updated. And so you can see that both gold and the franc's on top, gold's on the bottom. The red line is when the post was made back in 2011. You can see that both have struggled. And our main point, then was that the metals complex was most likely going to struggle with this really quality canary in a coal mine signal. So I want to share, we share this with our metals members week in and week out for years and years, folks, that don't overlook the important message of the Swiss franc, what it sends to you when you're making decisions in the metals complex. So since the franc hit that 30-year resistance line, here's a chart of the performance on gold at the top, silver in the middle, and GDX at the bottom. And you can see that since that point in time, almost a couple of key Fibonacci numbers have come in. Gold's lost 34%, pretty close to 38, and silver's lost 65%, which is pretty close to 618 Fibonacci number, and GDX is down 71. So this is when sentiment can be at extremes and long-term resistance channels can come in. Don't be surprised to see this type of action take place for years to come. And so today, why we're doing this webinar, something that we haven't done in years, some more, to me, some inflection points that could be just as important, everyone. From 7 years ago, we're seeing similar important inflection points taking place today. So we wanted to reach out to you in the world and make sure that we essentially share this with you to empower you in this opportunistic sector. So here's an update on the Swiss franc. And you can see that the franc has been making a series of higher lows. This is a franc on a monthly basis. Keep in mind, folks, this is almost a 4-decade chart. And so we're at, to me, a really, really important price point for 2 different reasons. One, we have the series of higher lows going back. And keep in mind, this is a 15-year support line that the drifting sideways and lower is now testing 15-year rising support. And if you'll notice, if essentially the $1 range has been support and resistance several times over the last 11 years. So this is a key long-term support test in play for the franc. So from a metals perspective, metals bulls, anyone that's you have the physical asset, or from a trading perspective, you're keeping your fingers crossed that this support point holds, because this is a great place that it could rally off of. The one thing that we want to talk about is that keeping the open mind and not being bullish or bearish, there's a chance that the Swiss franc over the last several years is forming a descending triangle pattern. And so the importance of right now, why we believe renting is the key. It's not, you don't have enough evidence to say back up the truck. We remain open-minded to backing up the truck in metals. But right now, folks, I believe you should be in the renting mode, the flexible renter. Because if this support line would break, the measured move would suggest that the Swiss franc would fall around 17% in value, down to just below the 85 level to around 83. And that would be about a 17% decline. So if that would happen, this is why this is a key long-term inflection point, folks. If a currency that's highly correlated with the metals complex would happen to fall and give back 17% of its value, you can darn well bet that the metal is going to give back just as much, and the odds are more. So this is really a key inflection point that, from a risk management and a renter's perspective, folks, that we've got to get this message out to you to see how important this currency is and the price message, the price point that it is currently. So a lot of you some may not have good charting software, that you don't feel is quality from charting some of the foreign currencies. And I'm not saying that's the case with each of you, but just in case that does apply, I want you to just keep aware and watch the price pattern on FXF. That's the Swiss franc ETF. Now, I'm always in favor of the indices because an ETF is going to have some form of a drift, whether we want to call it contango or whatever label you want to put on it. It doesn't track the index exactly, but this is pretty close in case you don't have access to charting this franc itself. So you can see that the franc is testing rising support coming from the lower left to the upper right. And also, it's essentially, folks, been in a 3-year trading range, and it's now back at the bottom of the trading range. You know, could this be a W bottom at support? So the difference between renting and owning is going to come in with a couple of different price zones. You sure want to make sure that you're a renter if the franc or FXS breaks below 91, because there's really not much support in the franc until, you know, we get down in here to at least the 96 level. So that'd be about a 600 basis point decline in the franc, and so that would be pretty hard on metals. But if the franc can hold its support, and if it can rally above this falling 7-year resistance line and break above its trading range, you're going to want to move from renting to owning the metals complex. So again, this is one of the more important price points for the Swiss franc currency in many years. So if you have a way to set alerts on this, I would set these 2 alerts, one at 91 as an alert for backing away from metals if it breaks below 91, and then if it breaks above essentially 101, be a really bullish signal. So another currency that's highly correlated and important with metals, when you think about this, is the Aussie dollar. Look back here in 2001. This is when the CRB commodity index bottomed. This is when the gold and the metals complex bottomed in 2001. But the thing I want you to keep aware of, that essentially this asset, being the Aussie dollar, is in a 20-year rising channel, creating a series of higher lows and higher highs inside the blue channel. But you'll notice at the same time that the franc was hitting long-term resistance, look here, everyone, in 2011, the Aussie dollar double topped. This is a weekly chart with momentum at some of the highest levels in years. So again, this was other evidence that helped me suggest that a long-term trend change could be in play. So now fast forward to current conditions, you can see that it's the weakness over this past year has the Aussie dollar testing 20-year rising support. This rising support has made a small reversal at the apex of a bullish falling wedge that 2/3 of the time the asset breaks out to the upside. And also you can see the 2015, almost 16 lows where metals and miners especially had a really quality short-term rally. It's possibly made a higher low recently above the 2015 lows. So, excuse me, the key breakout and breakdown price points that you would want to watch is if it can break above the 75 level in the Aussie dollar. That would be extremely bullish, especially when you look at that momentum is oversold. It's actually a little higher than a few years ago and attempting to turn up. And then the renting, or trying to be really cautious about exposure to the metals complex, the alert would go off if it breaks below essentially the 69 level, because that would break a 20-year rising channel. So that would be quite negative message from this highly correlated currency. So now we have 2 of them. The Aussie dollar and the Swiss franc are both testing long-term support at the same time. So it increases the likelihood, folks, that we're testing an inflection point that will be really big. I think if we look back 3 to 5 years from now, we'll look back and say, boy, that was a really important time in this complex. Another currency that is important to the metals complex, I think is worthy of keeping a good eye on, is the euro. You can see that the euro has been creating a series of lower highs and lower lows since 2008. It's also fairly correlated with currency. See here, there's a 2011 peak in the euro, which also corresponded with the peak in the franc, with the Aussie dollar and the metals complex. Excuse me. Oops. And so we see this year that the euro has been falling, metals have been soft, the franc has been soft, dollars rallying during the same time frame, but we're seeing a support test while this is creating lower highs and lower lows at the potential apex of a bullish falling wedge. So again, now we have another currency that's testing a almost a multi-decade, but a very, very long-term support inflection point at the same time. So add another one to the list at a really rare price point. So I mentioned earlier that you want to combine channels, patterns, and sentiment if you can. And so this is a look of where the sentiment on the euro stands currently from sentimenttrader.com. And if you're not a subscriber to them, I have been for at least a decade, maybe 15 years. They put out fabulous information. I can't suggest them enough, and it's sentimenttrader.com, everyone, if you're not aware of it. But this is a look at sentiment on the euro, and you can see that more often than not, when people were cocky, believed in the euro a lot, and it was above this red dotted line above 70, the euro most often was closer to a high than a low. And then on the flip side, when it was around the 30 range, you can see that more often than not, the euro was closer to a low than a high. So the euro is not at 9-year extremes, but it is fairly low right now at a reading of 42. So it would be a nice place if the euro would rally. We could say that it would surprise a lot of people with, to me, this isn't ideal, folks. It'd be really sweet if you'd see the euro at 20 versus 40, but while it's testing support, this is not a bad sentiment level. Canadian dollar, a similar look. When the Canadian dollar's high, it's been a lot closer. Here's the key high in 2011. You can see that 80% of the people were cocky on the Canadian dollar, and they were wrong. And then you can see back in a couple of years ago, when a nice rally in the metals complex took place, that hardly anyone was a believer. Sentiment was 10% at the time. So right now, again, the Canadian dollar sentiment is not as ideal as a few years ago, but it is around 40. So oftentimes the Canadian dollar has been closer to a low than a high when sentiment is at these current levels. The Aussie dollar we mentioned earlier is highly correlated with the metals complex. You'll notice a really good quality low took place when hedgers in 2008 owned this crowded of a trade. The flip side, the high took place here. You can see a quality low again in 2015 where that took place. And hedgers again now have one of the more crowded trades, betting that the Aussie dollar, leaning towards that the Aussie dollar will rally, So this is one of the more crowded trades in the last 9 years. And finally, looking at King dollar, it looks the opposite. You can see, when very few people are bullish, not a surprise, the dollar was much closer to a bottom than a top. You can see that. Here's where we came in early this year. Very few people felt good about the dollar, and so the dollar has surprised the majority of people. It's put downward pressure on the metals, and you can see right now that a few times when sentiment was quite high, the dollar was much closer to a high than a low. It's not at the extremes of the last 5 years, but it is fairly lofty at 67% bulls. So if King dollar would back off, it would surprise several people. So each week we try to share different indicators to help us make determinations, everyone, about renting or owning the metals complex. And so this is a good ratio that I find very valuable. It's the gold dollar ratio, excuse me. And so when this ratio is going down, it's reflecting obviously that gold is weaker than the dollar. So if you want to be bullish, whether you're renting or owning the metals, you do want to see this ratio heading higher. So the long-term trend is down. You can see that this is the 2018 decline where the dollar or gold has been weaker, than the dollar, but it is testing a support line. And you'll notice over the last about 90 days, it's just essentially trendless. It's just a gerbil in a cage spinning, going sideways, caught between support and resistance. So another key measure to watch is if this ratio would happen to break out above the 90-day resistance levels, that would give a nice short-term message towards the metals complex. And again, from a renting or owning perspective, you don't want to see the 2017 lows taken out at 2. So again, a quality, short-term, important message is going to come from this ratio in the near term. It just has to happen because there's so little wiggle room. So now let's just look at the opposite. Here's the here's the US dollar gold ratio over the last 6 years, but I want you to primarily focus on, this was when the ratio was hitting a peak, and so you've noticed a new downtrend is taking place since the fall of 2015. So over the last 3 years, this ratio has created a series of what, everyone? Lower highs and lower lows. And it's not quite at the top of the channel, but you can see momentum is recently was at one of the most overbought levels in the last 6 years. And again, it is in a narrow trading range, but we see a few of these bearish reversal wicks sticking up there. So to move into a positive long renter's position in metals, or to move into an ownership quality position, size position in the metals complex, you really want to see this support line at 2 break. So I published this on the blog recently, and this is one of the things that led me to want to do today's webinar, is this potential giant what if of head and shoulders, bullish and bearish head and shoulders. So the bottom chart is the US dollar monthly, the top chart is gold monthly. And so this really I just want you to step back and look that over the last few years, there's nothing that's proven. I mean, you could make the case that they're both in trading ranges, and who could argue with that? They really are, everyone. But there's a chance that gold is forming a bullish inverse head and shoulders with the right shoulder in play, and the US dollar forming a bearish head and shoulders with the right shoulder in play as well. So from a big picture reversal perspective, there's a chance from these patterns that the last 7 years has been gold has been creating a basing pattern for the last 3 years, and in the 7-year rally in the dollar, that over the last 3 years, it's been creating a topping pattern. So these are far from proven. To substantiate or confirm that this is in play, you'd have to see gold break above these flat tops, which would be the neckline, and you'd have to see the US dollar break the lows, which would be the neckline as well. But it's interesting, as both of these are highly, oftentimes inverse related assets, I find it fascinating to see these potential multi-year reversal patterns in both taking place at the same time. So it's time to do a second giveaway. And so if you would like to participate, again, hit the orange arrow and expand your thing to the left. And again, the first one to answer this question correctly will get a 90-day subscription to our metals report. So again, the first one that answers this correctly, and Rick, the intent is to answer these at the end of the webinar. Okay, gold stopped on a dime back in 2011. What Fibonacci extension level, based upon the 1980 highs and 99 lows, caused or not caused, what extension level was in play when gold stopped on a dime in 2011? So if you were to take a high and a low in gold, a high in 1980 and a low in 99, what Fibonacci extension level did gold stop on a dime at? And we'll look at that chart shortly. If any of you are familiar with Fibonacci, there's not going to be too many possibilities on extension levels. So here's your answer, and it's the 261 extension level. So this chart just looks at gold clear back into the 1970s, and so if one would take the 1980 high in gold and the 1999 low in gold and apply Fibonacci to it, you can see in 2011 that gold tagged and kissed the underside of the 261 extension level and stopped on a dime. So this was another piece of evidence, folks, that I had in play when I suggested in September of 2011 that gold should be flat to down for years to come. You know, that was potentially 800-pound resistance level for gold at the time. And so any of you, if you've seen some posts, it's really interesting, you know, that these were two important price points for gold. Just kind of drifting away from the metal spotlight just for a second, everyone. You know, if you looked at, we share this every week, the 2007 high in the stock market and the 2009 low of the stock market, if you would apply Fibonacci to that, guess where the stock market has stopped on a dime this year? At the 261 extension level. That took place in January at the highs. And so keep in mind, and always, you know, there's many great Fibonacci or ways to use Fibonacci, everyone, but I want to encourage you to kind of think about using Fibonacci in a 30,000 foot view. You know, zoom out. This is a weekly chart. This goes back almost 35, 40 years. Don't be afraid to apply Fibonacci to extremes in price. You know, this was cocky and exciting back in the 80s, and this was really frustrating in 1999. So right as gold was ready to take off, it made a double bottom. What did stocks do? Well, they were making a top at the same time. So we all are aware that key inflection points in different asset classes can happen. But the takeaway from this slide, folks, is do use Fibonacci extension levels on long-term inflection points across the board in all assets. And again, today's webinar, just wanting to remind you folks, I don't have a bull or a bear hat on, and I would encourage you not to have a bull or a bear hat on. Just be thinking about these positions. Are we in a time in our lives that renting the assets, being a flexible renter, is probably more strategically correct, or is owning the asset? And again, today is to empower you, to help you with those decisions. We want you to be prepared, just like the Boy Scouts. Be prepared that regardless of maybe what you think might happen in these assets, you know, these charts, folks, are made not by Chris. They're made by billions of free-thinking men and women around the world that have access to all known knowledge on the planet that given day. So just take the patterns for what they are, keep the open mind, be prepared, and be flexible, and I think you'll really have a lot of fun and have a really nice risk-reward experience in the metals complex. So I'm going to talk about in a minute bullish and bearish ascending triangles in the metals complex, but I just wanted to, because something's really been happening big in Bitcoin lately, and I just kind of wanted to share with you before we took this same pattern and applied it to the metals complex and why it could be so important. This is a chart of Bitcoin. We know that its lifespan isn't very long, but this is a weekly chart going back close to its formulation or creation back in 2013. But I want you to notice a couple of things. Bitcoin has spent the majority of the last 5 years inside of rising channel 1, the blue shaded area. And you'll notice it kissed the underside of this, came down for couple of years, hit the bottom of the rising channel, and then took off. And then at the beginning of this year, when it was around 20,000, you can see it kissed the underneath side of the long-term channel, created a hanging man reversal pattern on the second kiss of this, and then started fading. But you'll notice over the last few months it had been fairly quiet. But what pattern was this forming? If you look over here on the left, this is a bullish ascending triangle that we played very heavily in 2017 in the stock market. It was going up. Our major focus for patterns and trying to search out were any stocks or indices that were creating flat tops and rising bottoms, because 2/3 of the time this asset breaks to the upside. So you have a clean breakout, and then you set your stop underneath. Now on the flip side, when an asset starts creating lower highs and flat bottoms, this is a descending triangle, and roughly 2/3 of the time the asset breaks to the downside of this. So turning to currently, again, this is a weekly chart on Bitcoin. You'll notice that for nearly 9 months, it had sit along this shelf, being potentially the bottom of a bearish descending triangle pattern. And once that broke, folks, the floodgates were opened up. And I think Bitcoin's lost about, what, 40% of its value in 2 or 3 weeks. So folks, this is the power and the importance of recognizing these types of patterns from a long-term perspective. So I just wanted to plant that seed because this is something that has happened just recently based upon an important chart pattern this year. So let's now look at, this is a chart of silver going back the last 25 years with the same snapshot of focusing on these, because these are favorite patterns of ours and they've treated us really well on our trades. So we've played numerous bullish ascending triangles in silver on the way up, and I want to just show you what we spotted along the way. We can see this bullish ascending triangle, and then when it broke out, silver rallied, what was that, folks? Almost 100% in a short period of time. Then we see another bullish ascending triangle, and once it broke out from here, the rally didn't last long, but that was almost a 50% rally in a matter of just a few months. Then we can see another bullish ascending triangle forming. Once the broke out to the upside, this was 30% rally in a little bit over a year. So again, zooming back, keeping a long-term perspective and looking for these highly successful repetitive patterns, folks, is really profitable and beneficial in helping you make quality long-term decisions. So here's something that we highlighted a few years ago, and this was a bearish descending triangle pattern. And you'll notice that once it slipped below support, just like Bitcoin, this was trading, what, about $27. All of a sudden, $27, a couple of years later, you're looking and it's $14. And so it's almost a 50% decline from once the base of that pattern, broke. So I just want everyone to be aware of the pattern that's been forming over the last couple of years and why, from a timely event, why we felt it's really important to reach out and why we would be honored for you to become a member in the metals complex, because I believe we're at really, really important inflection points, folks. And so this silver is testing now the 2015 lows, which could be the bottom of another bearish descending triangle. So this is something that obviously if it breaks to the downside, let's now go back to our theme. Would you be better off being a renter or an owner if this pattern would play out to its predominant odds, which is a 65% chance of a downside breakout? So again, this is a really important price point and an opportunity that we would really love to help you with. So if you're open-minded, you want to try to just take advantage of movement, you don't have a bull or a bear hat on, you just have an opportunity hat on, this is a look at, because if silver would break, if this read is correct, that that's a bearish descending triangle, if silver would break this, the height of this pattern would suggest that silver has a long way to fall. So again, if you're wearing a hat of opportunity, then the trade that you'd want to keep an eye on is ZSL. So that's the inverse 2x ultra short silver ETF. So you'll notice in 2015 when the metals rally, it fell extremely hard over not even a 6-month period of time. But the bottom line is the blue shaded area is a trading range that once it broke it fell hard. Now it's worked its way back up and it's kissing the underside of this trading range. So I'd encourage you to be charting this ETF, watching it closely, and if you would see a confirmation of these things, if the franc breaks long-term support, if the Canadian dollar breaks long-term support, if the Aussie dollar breaks long-term support, if the dollar gold ratio breaks down, and you see this break up, and you have your opportunity hat on, be looking to rent ZSL for a while. So one of the key opportunities from these markets being wrung out or wound up, to me, this is one of the really exciting charts for upside possibilities on a trend reversal would be this one, which we share every week with our members, is the silver gold ratio. And what you want to see is to send a bullish message to silver, gold, and the miners, you want to see this ratio heading higher. So we've seen that since 2011, it's just continued to drift lower and lower and lower. It's been continuing to say, rent me, rent me, rent me, over and over and over. It's not said, own me, own me, own me for years. But now it's testing support that goes back 25 years. You'll notice the lows in the 1994 range, 95, 97. You see the 2003. You see this in, what, 2008 or so. And 2 years ago when we saw a rally, it's drifting lower and it's testing long-term support that trends down. So it's still just screaming, rent me, baby, rent me. But if we would see a reversal to the upside and break above this, it would send a strong message to the bullish case that we haven't seen in years. So again, this is another inflection point that we haven't seen this test since we suggested that metals could be flat to down for years to come in 2011. I mean, this is the lowest level since 2011. It's even lower than any of these price points. So you got to go clear back to into the mid 90s to find this ratio being as wrung out as it is now. And so this is where reversals and opportunities can come from, folks. And that's why we want to be able to just let you do your thing in life, do your work, enjoy your hobbies, enjoy your family and friends, and let us keep you updated on these things on a weekly basis. So it's time for another quiz today, but we're now going to up the ante a little bit. Again, it's pull out your slide bar in the upper right so you can answer the question. But this one is the first one to answer. Will now win a 1-year subscription to our Metals Weekly Report. So again, the first one correctly answers this, will get a 1-year free membership to the Metals Report. So the question is, silver looks to have double topped in 2011 around 50 bucks. What year did the first top around $50 take place in silver? So again, silver hit $50, real near $50 in 2011. That looks to us from a long-term perspective to be a double top. When did silver first hit the $50 level? What year? Anybody think of the Hunt brothers? Anybody old enough to remember the Hunt brothers, the family that still happens to own the Kansas City Chiefs? So here's your answer. The first time that silver hit 50 bucks was in 1980. And you'll notice that it screamed higher, then lost a measly 93% of its value, and then it's embarked on an upward move. So again, folks, part of the reason for bringing this up is to, I didn't make this up. It's still hard for me to believe, folks, but it just seems like charts have memories. And it doesn't matter what asset this is, that whatever price peak was hit in 1980, if that asset continued to go up, someday it was going to become important. And as we suggested in 2011 that metals would be flat to down for years to come, silver was tagging this high of what, 31 years later at the same time. So again, this was another piece that gave me evidence to try to put this puzzle together to say this was a time to rent these assets, folks. Don't be an owner, look to be a renter, because the time, the patterns, and the sentiment seem to be right to really back off. And again, that's why we're coming to you today. We wanted to make this webinar free. My goal when I'm not here anymore is I hope that you can look back and say that guy from the Midwest helped me out. You know, that's all we're here for, folks, is we just want to help empower you to make better decisions to help your family, your loved ones, and the charities that you care about. So this is a key price point, we believe, for silver. As we looked earlier at long-term Fibonacci levels, I want to remind you that in reality, silver's just in a monster, what would we say, 35-year trading range, folks, with the low of the range being about $3.50 and the top of the range being 50. And so if you would happen to take the low that took place in the early 90s, and then you would take the high that took place in 2011 and you applied Fibonacci to it. You'll notice, folks, the short-term rally a couple of years ago took place at the 23% fib ratio, retracement level, excuse me. Then we see a rally up, and now we're back at it again. So the $14 level, everyone, has been important a few times. You'll notice that this was the top of a bullish ascending triangle, and when it broke out, prices got a lot higher. You'll notice it sliced through it right in here, so it wasn't so meaningful, but if you would go all the way back to the early 80s, you can see that that was an important level. So the $14 level has been important for 23% retracement of the low of $3.50 and the high of 50. It's also an important level that several lows and highs have taken place. And then if you also, one of the things that we try to do, folks, is just see if you can tie inflection points together. In other words, you know, we like the idea that oftentimes we'll put happy or sad faces, the emoticons, on text messages and different things, but I want you to think of highs and lows not as emoticons, but as emotive points. They're emotional points in time. And so one of the neat things about chart analysis is you'll be surprised that the more emotive points that you can tie together, the higher the odds that a key inflection point is going to take place. And so you can see that this low took place prior to a big rally. You can see that these highs came in here and they declined. You can see it bumped up near it and then backed off, and then once it got above it, it blasted off, came back and tested what used to be long-term resistance as support, and then it rose. And so now we're back at this line that's been in play for 25 years at price point 1. So again, this is something that we just don't see often, folks, and this is why we're reaching out to say important, and we want to be on board. We want to be a partner to try to help take advantage of these inflection points that we hope that you haven't been aware of until today. So another canary in a coal mine to making metals decision, folks, is the GDXJ junior miner to GDX senior miner ratio, and this is what this looks like. But you'll notice for about a year and a half, this ratio's chopped sideways in a trading range. And so we're at the lower end of the trading range, and 3-year rising support is coming into play as momentum at the top is now the most oversold in the last couple of years. So this would be a really nice price point. To what you want to be looking for here is bullish reversal patterns at these dual support levels with oversold momentum in play. So again, a really important trading range test, a year and a half trading range, and 3-year rising support in play for this key ratio. Another ratio that's really got my attention is this is the XAU index, and if you're not familiar with it, the XAU index is the gold and silver mining issue or index, and part of the reason it's one of my favorites is it was the first metals or mining ratio or index I could chart, everyone, because the XAU is the mother of all old. It's got the most age to it of any. The gold bugs index comes next, and then you start coming up with the GDX and the GDXJs. But if you really want to look at long-term patterns, folks, you need to look at the XAU or the HUI, which is the gold bugs index. So this is looks at the XAU, gold and silver miners index, divided by the S&P 500. And you know, when the ratio is going up, miners are much stronger than the S&P and the flip. And you'll notice in the last 9 years, this ratio has been really hit hard. Essentially, that took place in 2011 when we suggested to get out of that metals should struggle for years and years to come, and they have. And so you can see that a renter's message has been on. Don't be owning this stuff, just be renting it. Step aside. Don't have the ownership role. But what intrigues me now is that the punishment and the big decline that's taken place. You see a low in 2015, a sharp rally that didn't take very many months. It was a counter trend rally, and then we see it come back down through the last few weeks, and it's now testing the 2015 lows with the possibility of a double bottom or a W forming. So this could be the left side of the W, the middle of it, and now this could be the right side of the W. And so the trend is still suggesting to rent. But what we want to be aware of is then if we see a breakout to the upside, it wants to say you want to be a renter on the long side, and if you got a quality breakout here, you want to look at owning some. So if this ratio does break out, the ratio has been suggesting for several years to do what? Short miners, long the S&P. But if this ratio would be bottoming and it would break out to the upside, it would be the first time in 7 years to suggest to long the miners and short the S&P. Now that message has not taken place, but this would be a pair trade message that would be sent if this ratio would hold its support and break out above 7-year falling resistance. So today on the blog, I put this chart, and one of my favorite things to do is to admit that I have biases. I don't know if you ever admitted that you have a bias. You're probably better than I do. But I like to look at charts and try to hide from myself what the chart is, just so I can see the chart for what it's worth, not to try to have a biased decision. Well, I think because of the president, or I think because of the Fed, or I think because of oil prices, or because of Amazon, or because of trade wars, this, or this is going to happen. What about folks just saying price is everything? My bottom line is going to increase or decrease by when I buy and where I buy and where I sell. So this is my way of looking at things on a charting basis, just so you can see the chart for what it's worth. So I'm not going to say what this asset is, but it is influenced by the metals complex. And you can see that since the mid-90s, whatever this asset is, it's been in a rising channel of creating higher lows and higher highs. It's stunk it up since 2011 or 12. It's really not done well since 2017. So the decline over the last 2 years has it doing what, everyone? Let's see, it's testing 20-year support. You also see this line coming in that this was a high and there was a low and a low, low and a rally, a low and a rally, a low and a really big rally, a low and a rally, and then once it broke below it, it sold off. And now we're back. So there's an inflection point line. And then there's a chance that this is what, a bullish falling wedge, which 2/3 of the time results in higher prices on an upside breakout at 2. So if just knowing what you know, if it would break out at 2, would you want to rent it to the long side? Would you even consider, wow, since this is a 20-year channel, if it breaks out to the upside, I may want to look at owning this thing, even go beyond renting, try to own something for a longer period of time. So again, this is not about what this is, and we're going to discuss what the chart is next, but I just want you to think about charting and pattern analysis only in making decisions. It'll work a lot more often than you think. Again, this is about renting or owning, not about wearing your bullish or bearish hat. And just to go back, we'll look at it in a minute, but this is the Gold Bugs Index, the HUI, over the last 25 years. So it's testing rising support, and if it break out to the upside, it'd be really positive. So as we all know that the stock market hit a high earlier this year. It's down 8 or 9% of late. My take, folks, is that the long-term trend is still up. It's just done nothing more than trade sideways for the last, 12 to 15 months. We're closer to the bottom of the range than the high, but the long-term breakdown of the February lows hasn't taken place for stocks. But if it would, a major top could be in play. And if you followed us on many sites, there's many divergences that are bearish that are taking place in the stock market, and patterns are looking very similar to 2000 and 2007. So I just wanted for you to look at for a second, what was the performance going back to 2000? We all know that stocks sold off at 2000, but since it was so long ago, you might have forgot that stocks happened to fall in 2000 for a few years, but miners actually rallied for a few years. And so this compares the performance from the metals low and the stock market high in 2000 for a 7-year time period. And you can see that from 2000 to 2008, essentially the S&P was dead money. It was flat. And obviously, if you took inflation away, you had a negative return. But you'll see in that same time period, the miners gained 225%. So always be aware that at the brightest of times, reversals can take place, like in metals in 2011, but also beware that the brightest of times in stocks, sometimes reversals could take place, and these two can start going in opposite directions and create opportunities. So one of the opportunities I want you to be aware of, and because we bring it up, maybe the 5-year streak will end, but I still need to empower you on this, especially with as poorly as miners have been doing. But this is a look at GDXJ, folks, over the last, 5 years, and what has taken place in the month of December. So this was one of the reasons that we wanted to reach out to you to empower you to what has happened in the last 5 Decembers. And so the green vertical lines represent the lows or near the lows that took place in December, and then the rallies that followed, and we only let them last at a maximum of 90 days. Most of them didn't last that long, but you can see at the top, the average gain was 60%. The big puppy was this one that lasted 115, but we cut off the performance, but you can see we could have even slanted the numbers bigger to the upside. And it's easy to forget that a year ago, this upcoming month, that even though miners remained in a downtrend, that renting them to the upside wasn't a bad trade for a few weeks, as they made 30%. So we wanted to get this out to you ahead of time so that you could start being aware of why some key inflection points are in play and some opportunities in the month of December would be looking at us. And so here's looking at just GDX in those December pattern, what the patterns look like over the last 5 years and what the pattern looked like currently. And so you can see that going into each December's low, you can see some form of a bullish falling wedge took place. And once it broke to the upside, that's when these really nice gains took place. So again, we have a similar pattern. We see lower prices in the miners. We see overhead resistance in play. But keep in mind, folks, we're at that potential seasonal time of the year. But regardless of even the positive seasonality, the bottom line is if we see a break above these potential resistance of the bullish falling wedge, and again, 2/3 of the time these assets break to the upside from this pattern. If it does break to the upside, you'd want to be on the long side for a while and keep bringing your stops up tightly as the trend still remains down. Moving from, I look at quite a few metals stocks, but today's not going to be the day that I'm going to share a whole bunch of them. That's going to be for our members, but I just want to share one metal stock that's really interesting from a really long-term perspective. Obviously, it's been stinking it up since, what was the magic year, 2011. But this is GG Gold Corp, and this is a weekly chart looking back, over the last 15 years. And you'll notice along support line 1, a few bottoms took place in the early 2000s, a couple years ago. This is where in December, a nice counter trend rally took place, and the decline of late has it testing potential support line 1 while it remains inside this red falling channel. So there's no doubt, everyone, the trend is still down, but I just wanted to make you aware that from a timing perspective, from the currency perspectives, from the sentiment perspective, if we would see a breakout in the month of December, even if it wasn't long term, if GG did nothing more than rally up to the top of this falling channel, it's like a 45% rally. So these type of opportunities, folks, are out there that we want to share with you and empower you over the months and years to come, because again, we haven't done one of these metals for years because just the setups of opportunity and inflection points weren't there. We hope you can appreciate that we just don't try to bombard metals webinar after metals webinar just to try to get people on board. This is a rare situation, folks. We would be honored to work with you and try to help you, with these opportunities, going forward. So this was the chart we shared earlier. That was the quiz, excuse me. And again, this was the XAU index that just as a reminder from today's quiz on the blog, if it would break to the upside, that would really be a positive message from the bullish case. So I'm going to end it for now. It's going to go to Rick, and I appreciate all of you. I thank you for your time on of your viewership of our webinars and the opportunities. And Rick, go ahead and take it from here. And thank you everybody for being on the webinar.
Okay, got it, Chris. I'm going to switch over. Can you see my screen? Can you hear me?
I can hear you, Rick. I can't. Let's see.
It should show up in a second.
Yep, it's there.
Okay. Thanks, Chris. And there were a couple of people, and Chris, you might want to chime in on this. Just several people just asked exactly what rent versus own means. So do you want to just clarify that?
Sure, Rick. What's one of the most common strategies in the stock market is buy and hold. It's just ownership. It's just you own it and you hang on and you just go along for the ride, and you really want to do that in bull markets. And so when we see these downward trends, it's not a time to be a long-term buy and holder or an owner of those assets. If anything, you just want to be what is a renter? You're just staying in some place temporarily. And so sorry for any confusion anywhere there, folks, but it's just a way that I want people to throw away the darn bull and bear hat and just be thinking strategically, is this a time that I can own an asset and just sit Bahama Mamas and let it create a series of higher lows, or is the trend going against me? And the greatest likelihood of me making money is being a trader in and out as it creates lower highs. So you want to sell into strength. I hope that helps.
Great. Thanks, Chris. And sorry, folks, we are not giving away Bahama Mamas today, but we can get you the recipe. All right. Let me go to a couple of things. We're going to cover the quiz winners. I have the names, so we'll address that first. There's a special offer to everyone on this webinar. As you know, only 3 folks won the prizes for the quiz questions, but that doesn't mean that everyone can't win on this call. A little bit more details on the metals research for those of you who are not familiar with our research. And if you are new to Kimble Charting Solutions, at the end, we're going to just describe a little bit about what we do and break down some things for newbies. So the concept here is get to these 2 things for the folks that are familiar with our research, and then just go into more detail. We hope that this format works. We appreciate any feedback. The concept was to get to the meat first and then additional information later. So the winners. Now, I don't know if I'm pronouncing this name correctly, but Peter Hilfiker, it's Hilfiker. Peter gets the 90 days to the metals. Great job, Peter. Congratulations. You answered the first question, and the answer was the Swiss franc. The next winner for 90 days free to the metals research, which was the 261 fib line, was Leslie Chapman. Great job, Leslie. You got the answer to that correct. There was one guy I felt bad. You put 216 instead of 261. And I really felt bad, but we can't give it to you. Maybe there's something else we could do. Hang in there, and maybe there's an offer that you'll find of value a little bit. Now, the third winner, which is the 1 year to the metals research, 1 year free subscription. And by the way, that value is $637. That's an annual subscription to the metals. You answered correctly. The answer was 1980. That was Scott Dupuis. Scott Dupuis. Sounds like a hockey player. Scott, great job. You get 1 year of metals. So they are the winners, but don't go away, because that doesn't mean you guys still can't win who are still on the call. Offer to the first 61 people. We have several hundred people on the call. But first 61, we'll add 6 months on to a membership with an annual subscription to the metals research. So 6 months added on to a membership if you subscribe to an annual metals research. You don't have to. We offer a monthly at $67 a month. But if you subscribe to annual, we're going to add 6 months on free. Next 38 hours. We're just putting a time limit on it. Can't offer it forever. So the next day and a half, it's an offered 6 months on the back end of your membership. And the way we do it is we add it on. Once you subscribe, we'll send you an email confirmation with a screenshot that shows that you've got your extra 6 months. That's $400 of free additional research per person. So add that all up. We're giving away $24,000 of free research to the first 61 subscribers. And as you can see, guys, this is pretty straightforward. We're not listing out all the extra things we're going to give you and putting a value on it. This is $400 of actual free additional research you're going to get on top of the metals. In your chat box is a link that'll take you directly to the checkout or the billing section of our metals research. You would click on annual here, and you'll see 637 pop up. You would add it to cart and check out. And again, once you're signed up, I'll add 6 months onto this subscription here. Now, that's the offer. For anyone who knows us, likes the research, wants to subscribe, there it is in a nutshell. You could be one of the first 61 people. Now, the next stage here are people who may not be familiar with metals and what we offer. We're going to break that down a little bit more for you. It's a weekly report that Chris provides pattern analysis on gold, silver, copper, the miners, steel, and a few others, but these are the primary ones he covers every single week. Trade setups and alerts are also part of this. So when Chris sees an opportunity, you get emailed immediately. And you decide. Our job is to empower you, but you decide if it's action you want to take. Our job is to provide that information to you. ETFs and individual stocks are the vehicles. Plenty of folks on here who might see a trade set up and decide they want to trade futures or options. Completely up to you. That's not the path that we go down, but it doesn't mean you can't do it. But we will typically provide an ETF or individual stock as the asset that we're buying or going long or going short. One-on-one support. I don't know how big of a deal that is to each of you, but just know that when you call, if you have questions, you could spend time with me and we can walk through things. You're not just going to get an third-party email support team that we've hired outside. When you have questions, you get us, and we'll answer your questions directly. You also get delayed access to some premium webinars that we do on a monthly basis. They're called our Connect Series webinars. You can go to our YouTube channel and check out some prior webinars, but we will give you free access as part of as being a member to our weekly research to delayed premium member webinars. Here's an example trade alert for gold in this case, and you'll see this is what we provide in an email. In other words, the asset, the position size, the initial stop, and a couple of comments. This is the extent of Chris's dissertation on why to buy metals. And of course, as you know by now in watching this presentation, it's not about the comment. You'll never get a white paper from us. Not that there's anything wrong with that if that's what you want to read on an asset, but that's not what we do here. Some additional information that we provide sometimes is sentiment analysis from Sentiment Trader. This is some example sentiment information that we used, smart and dumb money indicator that we look at, and that also was some supporting information that helped us to go long in this asset. But this is the trigger. All that other information is helpful, but this is our trigger. It broke out of this falling channel, broke out of this resistance, went to the north side. It's still working on continuing to move higher, but this was our initial purchase. So this is an example of a trade alert that you would get. So you get the comments, some specifics up here, plus the chart. Here's another one. Here's another one. And this is on copper, same idea. Chart pattern analysis showing you where the breakout was. And look, Chris was showing in this case two support points, and a steep falling resistance line where it broke out of. This is just a little bit more of a blow up. You could see where it broke out, and we entered position on copper recently. Oh, well, that's nice. That might be somebody already signed up. So thank you, whoever that was. We're honored to have you aboard. All right, so here's an example of a recent report. I just want to go through, see if I can get back to this. Okay, this is a report. You'll notice it says 22 up here. It's 22 pages. Every week you're getting this report. And what's really great about it, again, is you'll see some brief commentary and a chart. And the chart tells you what to do. It's all about the visual and the pattern. And you can get through this in about 10 minutes. Page by page, chart, few comments, a chart and a few comments. Boom, boom, boom. And in some cases, you'll get used to Chris's research and you'll just look at the charts. It'll give you everything that you need. And you may not need the comments, but they're there if you need them. So, and again, it covers all the assets that I mentioned: silver, gold, copper, the miners, steel, and tells you if we're taking a position, of course, or not. All of that's part of this report. There's a sample on our website, but I'm just showing it to you here. And you can see that sample, of course, if you'd like as well. So that's just an example for you to get an idea of what the report looks like. And we'd like to be what we've often termed your 30-second advantage to investment research. And that means, in short order, it simply means that in very little time, you know what the pattern is and the action to take. And it's all within the chart. So let's get back here. I have to go back to the slide that I was on. There we go. Okay, so back to the offer. First 61 people. That's a typo. 6 months added on, not 3. That's where we started, but decided today we're going to give 6 months away free with an annual subscription. Next 38 hours, $400 of free research, $24,000 of research we could give away today. If everyone subscribes, that first 61 people subscribe. That link's in the chat box. And again, when you click on the link, you'll see billing. You'll get to billing. You click on annual. You'll see $637 a year. You're in the right place. Add it to cart, and then I'll send you a confirmation with the 6 months added on. If that didn't get you, then a 30-day money-back guarantee. It's included with all of our research, folks, and it does help make your decision risk-free. You can look at this research for a month, and if it's just not for you, fine. We'll give you a 30-day money-back guarantee. If you want it, it's there. So any questions on this up to this point, email us here, and I'll get back to you. You can also contact us by phone, which has been at the bottom of our slides as well. I'm just going to transition now. For anyone who's new to us, is not familiar with our research, I just want to give you a 30,000-foot view with some specifics about who we are, what we do. These are some practical challenges people share in terms of what they struggle with and the solutions that we provide with our research. Some people struggle to identify significant market turning points. They see a lot of turning points, but they want to know the big picture, major turning points. When you look at Chris's research and the type of pattern analysis that he looks at, weekly charts and monthly charts over years, we're much more equipped to spot those more significant turning points when he applies his great pattern analysis. Some people need help finding ideal support and resistance. Chris is doing it all day long. Some people do mostly fundamental research, but it's not enough to the extent that it doesn't help you execute that entry and exit. We help you do that. Don't have time to do in-depth research? Fine. That's what pattern analysis helps you do. It's all that research that everyone has done and the decisions that they've made, as Chris has said, are all locked up or reflected in a chart and in its pattern. We do that every day for you, so you don't have to. Some people second guessing your research want some confirmation, something to compare their own to. We certainly can provide that as a role for comparison, or fulfill that role is what I'm trying to say. And some people just don't have the confidence to pull the trigger. especially in these markets, especially with some choppiness that we've seen in some of these assets. It's not easy to do. We understand that, but we're here to give you the action that we're taking to help give you that confidence, the pattern analysis to help give you that confidence to pull the trigger. So in most cases, the problem with decision making is just too much information. And our job, our role for you is to simplify that. How simple is this? The financial sector, big pattern, big pennant pattern going back several years. When that sucker broke out, it was pretty simple. Breakout, you buy it. And we alerted members back in August of 2016 to buy financials. Now, I know this isn't the metals, but this is just an example of other research that we do beyond the metals. Clear out the noise of the world, look at the simple pattern, forget all the news, and buy the pattern. So, in short, big picture actionable chart patterns, simplify your decision, remove the noise, improve your confidence to take action, improve your entry and exit timing, and improve results. That's in a nutshell what we're trying to do for you every day. Same chart, just bigger picture version of it. Another example, this was Citibank. There was an ascending triangle. When it broke out, took off, we bought it. Nothing more complicated than that. These are examples of some of our favorite bull patterns we look at. For those of you who are familiar with technical analysis, this isn't new, just giving you an idea of what we look at. And some of our favorite bear patterns we look for. And then our goal is to just identify these high probability breakouts and patterns and then alert you to them. So it's one thing to show you, but we'll alert you to it as well. That doesn't mean that if we don't alert you and you see something, take the action. We're not here to hold anybody's hand. Our goal is to give you the information so you can make that decision. Some other unique things that we do that we don't see in the industry that Chris does on a daily basis. Again, I don't know how many times you'll see these kind of big picture long-term pattern charts with fib attached to it or assigned to it. But here's an example of the Dow, 261. There was a good opportunity to sell right there, and we alerted members to it right when it happened. Another example of an asset relationship showing divergences, in this case with junk bonds versus S&P. Very helpful to give us advanced warning. It's not a trigger to take action, but it's advanced warning to start watching. Hey, this thing's falling. At some point when the S&P breaks, which in this case, it just starts to break that rising support line, there's time to take action. This is your warning sign. So Chris's charting is oftentimes giving you warning signs ahead of time to start watching and paying attention to patterns to eventually take action. Another example of an asset relationship, non-correlated assets like dollar gold, which he shared earlier. Another one he shared earlier, another asset relationship, silver gold ratio. So this is the type of research you're going to see on a daily basis or on a weekly basis from us with this. Comparing yields and crude. Another great comparison here, an inverse relationship to pay attention to. Here's another one that really the goal here is to get you to think differently. These are inverted charts. And a lot of people might be scared to short. But at the end of the day, shorting is nothing more than going long the other way. When you reverse this chart, you see that it's on support. If something was on support, would you buy it if it broke out of, say, this falling channel in the Dow or in NASDAQ S&P? Well, in this case, we're just talking about shorting, but it's nice to be able to take certain types of patterns and reverse them just to get you to think differently, get you out of your comfort zone. So you're going to see that from time to time. Another thing you saw earlier was this idea of a quiz, getting rid of the asset. Who cares about the asset and the news? Let's focus just on the pattern and let's do what the pattern tells us to do. Because you might have, and we all do have, biases. Maybe there's an asset that we just think we'd never touch. But if you saw this pattern and then breakout, you're thinking, boy, I'd like to own that sucker after a major fall all the way down to the bottom of the channel. And lo and behold, I don't even know Truth be told, I forget what asset this is. See, it doesn't even matter. Just buy it because it broke out. So, but quizzes are a great way to help keep us objective, and we do that with our members from time to time. Be pattern biased, not asset biased. So again, I said this kind of earlier in a different way. The visual maybe has a greater effect. You know, we'll give you the research. Our job is to produce the information, provide it to you, but your job, of course, is to take the action when it's time. A couple things just about the research others have shared. You know, here's an example from Michael in terms of three very simple things in terms of his deciding factor. It was simple, easy to understand approach, clear information, and he made money. Can't get more simple than that. Thought I'd share that one. And then John's financial advisor. Couple things he shared is as far as the overall macro view is what he really likes about the research. Also, again, eliminates that noise for him, keeps things simple. And certainly, as a financial professional, he uses this information to share with his clients that helps provide some visual explanations as to what he's doing for them, as opposed to what oftentimes is just a lot of information that he shares. This is a way to helps him visualize things for clients. And it was a great compliment to Chris to get this from him late last year, that he was added to Forbes' top list of advisors in 2017, and he acknowledged Chris of the work that Chris does as a reason for that success and that acknowledgement. So this is now the research that we offer, all of it in a nutshell. We have individual research reports, our global trends, our sectors, sector commodity, and our metals. These are individual weekly research reports. You can combine that research, and when you combine the research, we give you one free. Our premium research is all the research we produce. So depending upon what you're looking for, $67 a month to $397 is the range on a monthly basis of the research that you can take advantage of if it's a fit, depending upon what's a fit. So again, coming back to this offer today, if the metals research is something you want to add to your tool shed, 6 months added on today, free with an annual subscription, next 38 hours. That's $400 of research that will add on to your research subscription. So you saw this earlier, how to do it when you check out. And if you come back and you look at you go to our website, that's under research subscriptions, you'll see all the research we offer, a summary of it. You could get details under each one. This is just a summary of all the research we offer. And again, our 30-day money-back guarantee to make sure that your decision is truly risk-free. If you need to get a hold of us, that's how to do it. And folks, that is a wrap. We are done. We are very honored to have you with us. And if I didn't put Chris to sleep, he can come back on and close.
Hey, great job, Rick. Thank you, everyone, for joining us today. I do believe we're going to see moves in the metals complex of at least 20 to 25%, a lot of volatility at these inflection points. We'd really love to be partnering up together and having some success side by side. So thanks for attending today, and thanks, Rick, for a great job, and happy holidays to everyone. Take care.